today we are going to discuss depreciation and its methods. But before going to depreciation, we should know the some terms used in depreciation. As we know, resources allocated by an entity as a result of past event and from which future economic benefits are expected to flow to the entity is called asset. International Accounting Standard 16 says about property, plant, and equipment. These are non current assets, that items that are expected to be used during more than one period and are held for use on the production or supply of goods and services, for rental to other, or for administration purpose. Assets that retain their size and shape but that eventually wear out or become obsolete. They are not physically consumed as such as supplies, but however their economic useful life diminishes over time. Such assets include plant, building, equipment, furniture and fixture, and same like that. However, land is not considered as depreciable asset because land has unlimited useful life. Now we should move towards depreciation. Depreciation means decrease in the value or decrease in efficiency of asset due to its use. Again, International Accounting Standard 16 says the term depreciation means the systematic allocation of the cost of a depreciable amount of an asset over its useful life. Our goal is to set off a reasonable portion of assets cost against revenue in each period of the asset's useful life. Actually, depreciation is just an estimate. The use of an estimated useful life is the major reason that depreciation expense is only an estimate. In most cases, the management doesn't know in advance how long the asset will remain in use. In the definition, standard uses two terms, depreciable amount and useful life. Depreciable amount is cost of an asset or other amount substituted for cost less its residual or disposal value. Suppose cost of an asset is 5000 and its residual value is 500. Its depreciable amount will be 4500. Next is, what is useful life? Period over which an asset is expected to be available for use by an entity, or the number of production or similar units expected to be obtained from asset by an entity is called useful life. Following three factors should be considered when estimating the useful life of depreciable asset: expected physical wear and tear, obsolescence, and legal or other limits on the use of the asset. In depreciable amount, word residual value is used. It means the net amount which the entity expects to obtain from an asset at the end of its useful life after deducting the expected cost of disposal. Now we discuss the methods of depreciation. There are various methods of allocating depreciation to accounting period. An entity should choose the method which best reflect the way the future economic benefits arising from the asset will be consumed by the entity. There are following five methods for calculation of depreciation, but these are normally three used. Straight line method, reducing balance method, machine hour method. These are mostly used, but two other are double declining method and sum of the year digit method. Let's discuss number one. The most widely used method is straight line method. Under this approach, an equal portion of depreciable amount of an asset is allocated to expense in every period of asset's estimated useful life till the asset remain in use. Formula to calculate straight line method depreciation is given here. Depreciable cost over estimated useful life. Second is depreciation under reducing balance method. In reducing balance method, more depreciation is charged at the beginning of the asset and less is charged towards the end because asset is more predictable and efficient in the start, therefore it generates more revenue as compared to later years. In reducing balance method, depreciation rate is calculated and then every year such depreciation rate is charged on residual value. However, to find rate or reducing balance method, formula is given here, 1 minus s over c power 1 over n. Here s equal to residual value and c means cost of an asset and n means estimated life of an asset. Under this method, we shall calculate depreciation rate for reducing balance method. Its practice will be done in next lecture. Okay, next is double declining method. This method is the modification in reducing balance method. While calculating depreciation rate for double declining method, following points should be carefully followed. Calculate depreciation rate under straight line method. Second, multiply above calculated rate with 2 to make it double. Charge such rate like reducing balance method on residual value every year. Depreciation under this method is calculated till the last year. Estimated residual value of an asset is not taken into account. In the last year, depreciation will not be calculated as above, but the difference between net book value and residual value will be depreciation for the year. Here, formula is given to calculate the depreciation rate, that is 1 over estimated useful life. Suppose useful life is 5 years, then 1 equal to, depreciation formula is equal to 1 over 5 equal to 20%, multiply it with 2 to make it double. The result will be 40%. It means our depreciation rate for double declining method is 40%. Next is machine hour method. Under this method, hourly rate of depreciation is calculated. The depreciable amount of the asset is divided by the estimated total working hours. From this, we can calculate depreciation per hour. This method particularly suitable for plant and machinery. This method is used only for those assets whose life can be measured in terms of working hours. Formula is depreciable amount or estimated total working hours. Next and the last is sum of the year digit method. In this method, greater amount of depreciation is charged in early years and less in later years. Under this method, year of estimated useful life are added with each other. Suppose estimated useful life is 5 years. Their sum will be 5 plus 4 plus 3 plus 2 plus 1 equal to 15. The total amount of depreciable amount will be divided by sum of the year's digit, that is 15, and multiply the result with the number of years of life remaining at the beginning of the year for which depreciation is calculated. In year 1, depreciable amount over 15 multiply 5. Depreciable amount is divided over sum of the year digit, that is 15, and multiplied by remaining number of year at the beginning of the year is 5. Depreciation for the year can be calculated in this way. Same procedure will be done till estimated useful life. This method will be explained with the help of example in next lecture.